Welcome to Trading Nation. I'm Frank Collins. Some of 2020's outperformers are closing out the year under a bit of pressure. Shares of Salesforce, FedEx, Regeneron, Dr. Horton, and Costco, they've all had a bit of a dismal December, all down between 5 and 9% so far this month, despite notching some pretty significant year-to-date gains. Now, could these be buying opportunities, or are they simply just some overdue pullbacks? Right now, to answer those questions and many more, I'm joined by Bill Baruch of Blue Line Capital and Mark Tepper of Strategic Wealth Partners. Gentlemen, happy holidays. Thanks for joining us. We're going to jump right into it. I'm going to start with you, Mark. Do any of these names stand out to you? Are any of these on your radar to buy? And what are you thinking about?
Yeah, so happy holidays, Frank. So two names that I've owned for a while are Salesforce and Dr. Horton. I actually bought more Salesforce, I believe, on December 9th. After the Slack pullback, the thing was right around the 200-day moving average, and I'd actually be buying more Dr. Horton right here as well. So just to kind of start off with Salesforce, Salesforce is a stock, in my opinion, that you can hold forever. I mean, it's all recurring revenue, very sticky customers with high switching costs. And if you think about it, data is a company's most valuable asset only if you're actually using it properly. And look, the thing pulled back because of the Slack acquisition. A lot of people thought maybe they were overpaying for Slack, but they have proven that they do very well on acquisitions. They integrated Tableau and MuleSoft very, very nicely, added a lot of synergy. And when I look at the Slack integration, I feel like that's just going to completely improve their competitive advantage. Switching gears over to Dr. Horton, by far my favorite home builder. We all know how great the housing market has been, and I think it's going to continue to be great as well. Dr. Horton specializes in affordable homes, so those entry-level and move-up level homes, has a very asset-light model, which means better risk-reward metrics for all of us investors, right? So I think for those reasons, it deserves a premium valuation over its peers. And when you just look at the trends that are in play right now, people relocating from cities to suburbs, that's going to continue. A few years ago, we were talking about millennials living in their parents' basement and not wanting to move out. That's not the case anymore, and that is a huge generation with a lot of spending power. You've got low interest rates, and pricing power is good. So I think Dr. Horton and Salesforce are two names I'd be adding to right here.
Yeah, I think nowadays they can rent that basement out and make some cash. All right, Bill, we're going to turn things over to you. Let's just really get technical. What are the charts telling you about Salesforce? How has this Slack acquisition impacted your take on the stock? And also, we want to talk about e-commerce. It is still technically the holiday season. What are the charts saying about FedEx, and is it a buying opportunity for that stock?
Thanks, Frank. Let's start with Salesforce real quick. I agree with a lot of what Mark said about Salesforce, about the acquisition of Slack. And also the soft guidance that they put out hurt the stock too. And really, I think that opens the door for really some exacerbated downside coming into the first part of 2021. Ultimately, this was we really welcomed this sell-off. You had a little bit of euphoria early part of September, Salesforce as well as the market broadly at 280. And especially if you trimmed, I mean, this again, you welcome the sell-off. This is a good stock to hold for the long run. 220 is my buy zone. I even stepped in front of that. I was buying at 230 the first time down there. But ultimately, I think that 382 retracement, I look at a Fibonacci retracement, you look from the March lows back up to that September high, a 382 down to there, comes in right about 220. It's also the gap from the post-earnings close with a big spike up at the end of August. There is a tremendous amount of support technically at 220 in Salesforce. It's a great place to be a buyer. I love it down there. And again, Mark pointed out a lot of the fundamentals. I think the Slack acquisition is huge. I use Slack personally. I use it now, I use it in my company. And I think it's a great program. I think they're going to do very well with that. Switching gears over to FedEx, I own FedEx and I own UPS, and I bought FedEx through this month too on this weakness, and technically it's been holding very good at 260. Got a lot of support at 260 there technically, but the real buy zone I'm looking down is again that 382 retracement that comes in around 220, $200. That's going to be a big area to look at. I got a lot of technical indicators that line in that buy zone there, and to cover that 382 retracement there, when things are an uptrend and they pull back, they stay above that 382 retracement. That is still bullish. Same thing if things are in a downtrend. If they stay below that 382 retracement, then they remain bearish. I think, as Frankie pointed out to the e-commerce and holiday season, a lot of this really kind of gets those gears going for FedEx, UPS, and then fundamentally they're on the more expensive end of where they have been historically, but not by any exorbitant measure. I think these are again great stocks, and I own both of them, FedEx and UPS, that is, and Salesforce.
So Bill, I I got to put you on the spot. You're saying 220 is your buy zone for FedEx, but today it's at about 261, 260.90. Is it still a buy for you at this level?
Yeah, right here. It's making a new record high. It made a new record high, and do I like the fact that it did that in December and it's already pulled back? No, not really. But it's really kind of gyrating the market profile, finding where the buyers are, and I think that's a healthy little pullback here. I mean, it's a little more than you may want to see, but again, I'm welcoming it. I like to have buy targets. And although my buy zone at 200 to 220 is still a ways away, we're building some really nice support where it really jolted higher and broke out. And that's building a good support level around 260. So that for me, what I call is first key support, 260, building there. And if that holds, it can really help build this thing to make new record highs very quickly. And if it falls back further, again, I'm welcoming 200, 220 for the long run.
All right, Mark, we're going to turn things back over to you. We got to touch on this just a little bit. Stimulus checks, either $600, possibly $2,000 coming down the pike. How could that potentially impact some of these stocks that we're talking about, the Dr. Horton, the FedEx, Salesforce, and other stocks that have seen that pullback in December?
So I don't think it's going to impact Dr. Horton that much. I don't think $600 is going to help anyone to buy that next house or build that next house that they were looking to build. FedEx, absolutely. I mean, e-commerce is not going anywhere. Costco, that's a name that'll benefit. I mean, when we look at the last round of stimulus checks, people did not pay their rent with that money. They went to Costco and they bought a new flat screen TV, right? So I think you'll continue to see more of that. You'll continue to see a lot of the money that hits the consumer's bank account. It's going to go towards consumption, right? It's going to go towards, making their house a more enjoyable place to live, especially as we're potentially seeing a second round of lockdowns begin to flare up. As you look city to city, you're seeing more restrictive measures popping up all over the place. So, I think FedEx and probably Costco would be the two that would benefit the most.
All right, Bill and Mark, I want to toss one more question over to you. Vaccines coming, they're already here, but obviously a bigger proliferation in 2021, especially by Q2 of 2021. How do you see that impacting these stocks, again, that have seen December pullbacks as we've seen these COVID rates rise? But clearly there is some hope on the horizon. A stock like Costco, FedEx, and potentially Dr. Horton, building those homes outside the city, have all benefited during the pandemic. When the vaccine comes and there's widespread adoption, how do you see these stocks being impacted?
I don't really see a major impact in the sense that I think there's been a little bit of a shift in the economy going more e-commerce. People are still going to be going to malls. And out here in Chicago, weather was warming up a little bit. Oak Brook Mall is a big open mall. People are outside. People are loving it. But I still think that a lot of the shopping is going to be done online. And then I think when it comes to moving out of some of the cities and looking at some of the suburbs and some of the home building that you referred to, I think that's just going to be a little bit of transition that we're going to see the economies and downtowns go through. So I think there is a little bit of a shift that's happening and it's going to stay. So and then something like Salesforce, I think that's a long-term stock. And Mark pointed to that earlier. They're very sticky, I think is the word he used. And I think as that is, their clientele is very sticky. So I think all these stocks, although they're taking a little bit of a bath here through December, I think there's a reason to find all of them attractive, whether we stay into a lockdown mode or shift into a vaccine and reopening mode. I think these are here for the long run. I like all of them broadly, but Salesforce and FedEx are those I've been buying here in December.
Mark,
Frank, so Bill nailed everything there, right? So the only one we haven't talked about yet is Regeneron. That was one of the names on the list.
Right.
Regeneron really benefited from COVID, right? They had that antibody cocktail. What I think is going to happen come the second half of next year as the vaccines are distributed is I think you're going to see a reversal in healthcare names next year, right? So a lot of these names that have done well because of COVID, I think you're going to start to see a lot of the other epidemics. The epidemics that are going to be here long after COVID is no longer the significant issue it is today, like cancer, diabetes, the aging population. All of those things are going to be front and center again after the vaccine is distributed second half of next year. So I would be gearing up and looking for ways to play that now, whether it's Exact Sciences and cancer or Tandem Diabetes and diabetes or Stryker, which makes orthopedics for the aging population. I think those are some opportunities that you could see in the second half of next year.
All right, last question. One word between the two of you, or one word for each of you. These stocks falling in December, overdue pullback or profit taking? Which one do you think?
Overdue.
Yeah, overdue. I'd go with overdue.
All right. Bill and Mark, thanks for joining us today, and thank all of you.